Strong loan growth, higher yields and lower credit cost ensured that FY23 was the most profitable year for India's banking sector. The combined profits of PSU banks and private banks crossed 2.3 lakh crore rupees, and as banks saw blockbuster growth, asset quality did not suffer. In fact, asset quality was the best that we've seen in more than 7 years. Slippages were down more than 26%. The outlook for the financial year is good, even though margins are likely to decline due to rising cost of funds. Loan growth is expected to moderate but remain in double digits. Amidst all of this euphoria came a warning from the RBI governor. I quote, "Bad loans are made in good times." Today's monetary policy was also an unexpectedly hawkish one, with the governor asserting that there will be no compromise on the 4% inflation target. This effectively could see us hold on rates, or at least hopes of a rate cut in 2023. So what is the road ahead for banks and India's financial sector? Joining me on the PwC and CNBC TV18 Presents CEO Dialogue is a stellar cast, starting with Ashwani Kumar Tiwari, the Managing Director of State Bank of India. Also with us, Zarin, the Cluster CEO of India and South Asia at Standard Chartered Bank. Kaushik Sharparia, CEO of Deutsche Bank Group India. Govind Singh, MD and CEO of Utkarsh Small Finance Bank. Gayatri Parthasarathy, PwC India Financial Sector Leader and Global Financial Sector Technology Leader. Sanjeev Krishnan, Chairman of PwC in India. Prashant Kumar, the Managing Director and CEO of Yes Bank. Rajiv Sabharwal, the Managing Director and CEO of Tata Capital. And J Venkatramu, MD and CEO of India Post Payments Bank. Ladies and gentlemen, what a stellar cast we have today to kickstart the CNBC TV18 PwC sector dialogue with the focus on banking. Before I get down to what we can expect in terms of opportunities, in terms of challenges for the banking sector, a quick show of hands, a quick poll. By coincidence, we've had the MPC deliver its monetary policy today, and as was expected, there is no change in rates and there is no change in stance. On the back of the commentary that's come in from the MPC and from the RBI governor, show of hands on how many of you believe that we could potentially see a rate cut in this calendar year. Those who believe a rate cut in this calendar year, raise your hands. Okay, that's 5, and the remaining believe, sir, you believe maybe the financial year. So majority, it's kind of split evenly between whether we're going to see one in this calendar year or in the financial year. And very quickly, Mr. Tiwari, let me address the issue of what we heard from the governor this afternoon, especially on inflation. The forecast still above 5%. A 10 basis point cut there. What's the expectation now in terms of what we could see from the MPC going forward? You'll have to use the mic, sir.
Yeah, thank you. So the governor was very clear that even though the inflation forecast has been reduced by 10 basis points, as you point out, but he says the risks remain in terms of uncertainties in the external environment. And as long as the war in Europe continues, as long as there is pressure on commodities and food prices, largely emanating from external sector, and there is uncertainty around El Nino and the weather forecast, and therefore the impact on food production, he would like to keep the inflation forecast at a slightly elevated level so that there is closer monitoring, there is more dynamic action, and the prospects of a rate cut, if they were, should be tempered down a little so that we are cautious, and then as things improve, maybe perhaps going forward.
Well, I think that certainly has happened. The tempering as far as the mood on potential rate cuts has certainly happened. But Zarin, I want to understand from you, do you take away from the commentary a more hawkish stance than the market was expecting?
Yeah, I would say so. But having said that, it all depends on how the monsoon is. And if we see a good monsoon, then clearly we'll see a little bit of the food inflation, etc., coming off. And hopefully, yeah, then we might see one rate cut by December.
One rate cut by December. So you're in the camp that believes we're likely to see still the possibility of a rate cut in this calendar year. Kaushik?
I think coming out quite clearly, at least the way we see it now, is that the MPC will need to come with a couple of cases where they will probably talk about liquidity to be controlled and let go, to give a sign to the market before they do the rate cut. So I think we will, I'm probably in the camp, like Mr. Tiwari said, probably the financial year, or not the calendar year, could even slip into April.
Could even slip into April. Yes, some of our respondents to our poll do seem to suggest that as well. Mr. Kumar, what's your expectation?
No, I think instead of, say, a rate cut, what we need to see how, when the situation is going to improve at the ground. And situation at the ground would be more in terms of the inflation, because they are not going to compromise in terms of inflation going up and there would be rate cut. So I think as long as the inflation would remain elevated, we don't see any possibility of the rate cut. And the inflation would be definitely dependent this time on the monsoon, but also in terms of the supply chain. What happens in the international, say, markets. And if there are, say, recession around the world, if the demands would be low, and there would be issues in terms of raw material prices, and if the inflation is not coming down, I think we don't see the rates cuts coming. So at least not in this calendar year, but hopefully if it starts happening in the financial year, I think that would be very good.
Well, yes, clearly we've seen that switch taking place. And of course, the governor also, or actually it was the deputy governor that reiterated the fact that while the RBI or the MPC is not sticking to 4%, they want to be aligned to the 4% inflation target, and that perhaps will drive the trajectory of what the RBI may or may not do going forward. Well, that's it as far as the MPC is concerned, but we are here to talk about the road ahead for India's banking sector. And before I get my panelists in, I am going to toss it across to you guys three to set the context about what you believe will be the growth drivers, what you believe are likely to be the challenges as well. Gayatri, over to you.
Thank you, Shereen. Absolutely. And pleasure to be here in this, distinguished, among the distinguished panelists, and a wonderful team also, right? Banking, in terms of as a sector, definitely makes a huge impact on the country's growth objectives. And if you have to be the third largest economy, right, by 2030, then banking sector plays a huge role, right? From setting the context, right, I would like to cover a few points, right? In terms of overall, I think the sector has been highly resilient, number one, right? I almost call it as a little bit, almost insulated. The insulation is working well, kind of thing, right? And also the profitability has increased in the past few quarters very, very well, right? Which is absolutely positive signs for, looking at the sector from a growth angle and what can be, done. More than anything, of course, also if you look at in terms of the credit growth, 2022-23, it's been, I would say, pretty high, 15%. And of course, I would call it as in terms of all the scheduled commercial banks, be it public sector banks or private sector banks, the NPA gross or net ratio has been, right, in terms of coming down. As you rightly said in the introduction, right, whether you look at in terms of the low slippage ratio or in terms of, right, the NIM improvements, I think the sector is doing good, right? Digital transformation is all over. It's written all over the country and all over the banking sector. And also in terms of the innovations that's coming across in payments, right? In whether it is UPI, UPI Lite, or anything else that's happening from a fintech ecosystem, etc., all are leading to in terms of how the disruptive technologies can help the banks to further, strengthen and grow, right? That's the kind of I would say from a context on where we are, right? What can be done more or what needs to be done more for next? I would definitely say that we have to reach to the last mile, right? While we are obviously the credit inclusivity that needs to come in, right? In terms of to the bottom of the pyramid, how do we further enhance it? What are the actions that needs to be done? And I'm sure Venkat is giving a big smile on that, right? Absolutely. Not only from him, but up from every angle of it, right? What needs to be done and how can we do? Because at some points in time, you look at India for the growth, you really need, I would call it as rural entrepreneurship that needs to thrive, right? Really, truly speaking. And that is what will make the country, right, in terms of grow fundamentally even more higher. We have people looking at the 30 crores maybe with a lot of obsession, and there is 100 crores to be looked at with even more obsession. That is when they will be looking at it. And also very clearly well-defined, very well customized and well-defined strategy for India and Bharat. I would call it as, right, in terms of two-step kind of an approach that can come up. And of course, usage of, right, I would say again, disrupt through technology. A lot of things through data, right, and data, right, and Gen AI, multiple things that is coming up, and which can be used for the banks. And to me, the most important and maybe one topic which I believe is there in every leader's mind here is talent. The way in which we are growing and the way in which the transformation is happening, the talent that's maybe today will not be the same talent that we will be needing for the future. How would you future-proof it, and what kind of upskilling, cross-skilling, etc. that we really need to bring on, right? Finally, I would call sustainability. Definitely, while all other sectors are focusing on sustainability, right, from maybe multiple things, right, from an ESG, I say government is doing a lot of things. How can banking maybe come up with an integrated strategy on ESG? And would that be feasible? And then what are the steps that can be taken, right? And those are the points I feel, right, in terms of to...
Well, Gayatri, you've set the context and you've given us plenty of food for thought and plenty of meat to get started with. But let's address the very first question, which is the resilience that you spoke of. It's not just the resilience of the financial and the banking sector, but it's the resilience of the Indian economy that we've seen, especially through a post-COVID phase. And today the governor alluded to that as well. Rajiv, let's start by talking to you about it. The expectation is 6.5%. That is the estimate that the RBI has put out as well. And there are varying estimates, but all within that ballpark range at this point in time on growth. Now, we're coming off a very strong year for the banking and financial sector. What do you anticipate as far as FY24 is concerned, but also a slightly more longer-term 5-year view?
If you look at the basics, I think a lot of them point to a much better future for us. We are a much larger economy. We've got the digital ecosystem working for us. We've seen per capita income growing, and I'm also seeing wealth being distributed in a better way. We've seen the rural economy, it did suffer for some months, but we've seen it coming back. And we're seeing a big thrust for Make in India. I feel manufacturing has the potential to create a lot of jobs too. So if you look at all of these happening, plus, so many other external factors, the China plus one story and so many others, I believe that this year definitely we will see a growth of more than 6.5%. I'm very optimistic.
What's your number?
I feel that we will be somewhere closer to 675 in that range. Because, looking at, you were speaking about interest rates. Whether there is an interest rate cut or not, we are already seeing the benefits of lower interest rates. The short-term interest rates are down. The long-term interest rates have also moderated. And where we were expecting interest rates to move up, they've actually come down. So we are in the economy seeing the benefits of that. Whether it translates through a repo rate cut or not, the benefits are accruing. So this will give us an impetus, and I see no reason why, if you look at over a longer period, we should be back to growing at somewhere closer to 7.5% and 8%, or 7.5 to 8%.
Okay, 7.5 to 8% in the long term. For this year, you believe that we're likely to be closer. Your estimate is 6.75%. But, Govind, let's address this issue with you, because Gayatri also talked about India and Bharat and that two-step strategy. And we just heard there from Rajiv talking about how there is a rural revival, again, something that the governor also spoke about. I want to understand from you, what is going on in Bharat at this point in time, and how do you believe the credit gap that we just spoke of is likely to be bridged over the next few years?
So if you look at, last 2-3 years, especially, we have seen the COVID period and before that. So one point is whatever Gayatri mentioned, all the interventions of Government of India and the digital part, whatever we have seen, it has made immense inroads and immense benefit to the rural India. I'll give an example, in fact, of my bank, though in previous years,
And he's saying previous years because he's on the road to an IPO, so he cannot make any forward-looking statements. Yes, with that caveat out of the way, Govind, go ahead.
So if you talk about digital account opening today, for me, the rural India is 100%. Not even a single account is opened manually. But that's not the case in places like Bombay and Delhi, in fact. So there are different reasons for that. So I'm trying to say that, rural India has adopted the technology to the extent possible. And the type of UPI use, QR code use is so much in increase right now. So that is going to make an immense impact on the Indian economy overall. We have seen the resilience of the rural economy. In fact, in COVID-1, there are hardly any impact on the rural economy. In second phase, yes, the second wave, there were impact, but they really came back very fast. And we are seeing if you look at the day-to-day activities and especially the economic activities in the rural area, they're actually, almost normal, in fact. And the cash flow has increased significantly. The activity level has increased significantly. The money flow has significantly improved, and the employment part has improved significantly during last 2 years' time after COVID. And even the repayment rates, which are very, very important, barometer for all these things, have significantly improved during the last 2-3 years. Actually, our rural economy, from the collection point of view, actually have significantly gone up. It is almost very close to normal. So we are seeing a normalcy, and these aids, especially the JAM Trinity. So, for example, some of the challenges actually give some pluses to you also. When demon happened, till the time, especially in the microfinance space, people used to have only cash economy. Yeah. Everything used to happen through cash only. But today, talk of anyone in microfinance, they are having only through bank account only. No one is dealing in cash today. Right. Even the collections part, people have moved to non-cash, less cash or cashless economy. So I think these are having a big advantage. The biggest challenge for rural economy has been the operating cost, which all of us talk about that part. Because the ticket size being low, the distance is being longer, so it becomes at times challenging. The economy, this technology part is playing a very big role in that, and we have seen that happening. So my sense is, again, I can't make any statement that way, but we have seen during last 2-3 years that is clearly visible that in rural economy, semi-urban rural economy has actually is really growing fast and growing well. And growing in a very balanced way. That's also important. Okay.
So a revival underway, and digitization is aiding that revival in a big way and bringing down operating costs, which has of course been a big challenge. Would you concur, Mr. Venkatramu? Do you echo the kind of confidence that we just heard from Govind there?
Absolutely. There's no doubt about it. In fact, I would like to add that if you go back maybe 8 or 10 years, the way we've started with Jandan, see, probably we've gone in a very, very systematic way in terms of creating that infrastructure. First, we started with Jandan, where almost 46 crore accounts got opened, and then the DBT pushed through these bank accounts. So which means the first step of financial inclusion, what is required in terms of access to these services, and third most important, access to these banking services. Today, if you look at the kind of BC network that is available, either through India Post network or through other BC network, I think that has been very, very strong. So all of this have added in creating a physical infrastructure. And I would definitely add to one point what Govind said, that in these kind of areas, it has to be 100% digital. So what we've observed is that wherever even a small element or component of paper-based process comes in, that becomes absolutely unscalable. Okay. So if it has to be scalable, it has to be 100% digital. And the adoption rate has been phenomenal when it comes to this segment of customers. So it's more about leveraging this infrastructure and add more and more services to this is what can actually pave way for the future growth.
Okay, well, speaking about future growth and leveraging scale as well as future opportunities, what about your universal banking aspiration?
Okay, that's again subject to regulatory.
Of course, it's subject to regulatory approval. Have you put in your application or not?
Okay, as per the current regulations, it's not we're not allowed as a public sector entity. But we're trying to socialize through various policy making bodies and things like that. I mean, we're not stopping at least putting our efforts. We're trying to collaborate with various players in trying to at least create an environment where we can make this set of customers credit ready, because today, as Govind rightly pointed out, the cost of service delivery, especially when it comes to credit, is very, very high. How can we reduce that cost by utilization of technology, by utilization of data, and what kind of alternate credit scoring models that are required? I think there's a whole lot of activity which is required. And more importantly, it requires a collaboration of various players, not only traditional banks, maybe even non-traditional players. We have seen in case of UPI, how it led to phenomenal success, where a combination of both traditional and non-traditional players joining hands, and today we are seeing success in front of us.
Well, Mr. Tiwari, let's talk about the road ahead now, and slightly more forward-looking. We heard, and you heard from the governor as well, that don't make poor decisions or bad decisions in good times, because invariably that does seem to happen. But at this point in time, bank balance sheets have never been stronger. The risk appetite, I would imagine, is strong as well. We're starting to see signs of private sector investment pick up, and if everything that we've heard from our panelists here this evening makes it clear that there is confidence in growth picking up from where we currently are. What is that going to potentially mean? Where do we see credit growth? Where do we see private investment? What are the signs that you're picking up?
Yeah, so you're right, the bank balance sheets are cleaned up over the last 4 or 5 years. Banks have made record profits in the last 1 year. Almost every bank is doing very good profits. And right, the governor did, we had a full day meeting of the entire board, public sector and private sector separately. And the theme was largely this, that you have to be cautious and be more careful about other areas, which so far, other than the NPLs, we have perhaps not paid as much attention. So things like sustainability, climate risk, those are some things Indian banks haven't paid much attention so far. So that's one theme. And of course, the other themes are around ECL and all, which are separate topics. Going forward, as I see, there are big opportunities. One opportunity is the climate finance itself. Now, with the targets which India has taken till 2070 and 2030, the interim targets, the opportunity till 2030 itself is around 30 lakh crores. Now, I say this when our balance sheet domestically, the loan book is about 28 lakh crores. So the entire loan book, we have almost we can double that loan book if we capture the entire opportunity. Of course, we alone won't do it. So that's one big piece which we have to look at, and it consists of myriad things like things as from EVs, the battery, the switching, the swapping technologies, renewable of course continues to be a strong play. Then going forward to the battery manufacturing, the pump hydro, all kinds of things. So I think that's one very, very big opportunity which all banks have and which we should start to leverage very quickly, because this is part of our national contributions and national commitments, and we actually need to do it for the planet itself. So that's one thing. The other, of course, is we heard about rural, and where the digitization and end-to-end digital for small ticket loans has made it grow very well, and therefore we see good growth, etc. But the opportunity, I think, we still have not leveraged very well, the banks especially, is the urban. The urban financial inclusion and the way we deliver to urban, because too much focus has been there on rural, rightly so, but I think India is urbanizing at a very fast pace, and apart from the urban infrastructure, which is a separate category where a lot of opportunity exists, but I think we need to take into account the more and more people coming to cities, and these are people with slightly higher earnings, just that they are not your typical salaried class employees in a good company, and how do we take care of those, whether through a BC model or through a MI5 model? That's something we need to work out. So that's another big opportunity which probably has to be leveraged. Infra continues to be very, very big opportunities as always. So the entire road building, the REITs and the InvIT models which are coming up, which are getting refined, monetization program, all of that continues to be a very, very big opportunity. So I think we do have very large opportunities existing for us as banks, and times look good going forward.
Times look good, and thank you very much, Mr. Tiwari, for articulating very clearly those three big buckets that you just listed out in terms of future growth opportunities for the Indian banking sector. And I want to dig into each one of those with our panelists here. But Sanjeev, first cut to you on the back of what you are hearing from India's largest banks, both public and private sector banks, and of course NBFCs. Signs of confidence, signs of growth, and potential headroom for growth from here on.
Yeah, no, absolutely. But I don't necessarily want to take a contrarian view. But, if you look at the panel that we did just 2 weeks back, and we had a bunch of consumer CEOs on the panel, and what they told us was that growth was slowing down.
Yeah.
The credit hikes, the credit cost is now starting to pinch the consumer. So, to the question that we were asking earlier, I think it's definitely a good time from a bank standpoint. I think the fact that the bank's balance sheet have been cleaned up, the NIMs have been going up over the last few years, etc. I think they're all good things. But you know, I'm also slightly concerned when we look at the way the banks have grown their balance sheets, and a lot of it actually is driven by retail loans. Now, I mean, the economy needs to continue to be in good stead, and there are clearly certain areas that were identified by Mr. Tiwari and others, which could actually challenge the economy per se, and because of the composition of the loan portfolio of the banks, that could be a challenge that they may face. And I'm sure, you know, the governor was referring to that and many other things. So I would say that yes, I think we have had because of the insolvency code, because of, you know, the credit offtake hike, which Gayatri also mentioned, maybe the pent-up demand. I think we have had a good few years. And there are good reasons for us, because geopolitically, geoeconomically, India seems to be in a much better position. Services, captives, growing, manufacturing, you know, through all the production linked incentives, etc. There's a lot of good things happening, but there could be bumps ahead, and I'm sure the banking industry would be up to it.
You know, I'm glad that you brought up some of the challenges that we must also address, because we need to be mindful of those. And Rajiv, you know, I'll get you and Mr. Kumar to address what we just heard there from Sanjeev. And he's absolutely right. 2 weeks ago, we were here in a room full of CEOs who are all in the retail and consumer space, and they did talk about the fact that you are starting to see signs of slowing down, especially in certain pockets on the rural side. Though Govind gave us a very different picture here this evening. I want you to address what we are hearing from Sanjeev.
Yeah, so I wanted to pick up on what Sanjeev mentioned and what Gayatri mentioned earlier, that for an economy like us, which is in a way credit starved to an extent, credit is going to be the driver for growth. And I do believe that credit is going to be a strong driver for growth. So I just wanted to pick up 2 points which were mentioned, one by Govind, and Venkat also mentioned it, in terms of higher intermediation costs in the rural markets. But if I pick up the microfinance business, it has the highest ROA among all assets. So how can the highest ROA be in a market which has the highest distribution costs? So there is a dichotomy there. Second is, you know, in my view, I may be wrong, so while everybody is making huge profits, I think we need to look at where are those profits coming from. Are they coming from higher margins, lower operating costs, or lower credit costs? If they come from lower operating costs because of digitization and lower credit costs, it's positive for the economy. But if they come for higher margins, then these costs are being borne by some of the companies Sanjeev was referring to. So I think we should look for more profits. All of us should look for more profits. But if they come from operating leverage and lower credit costs than margins, they would be more better for the economy.
Mr. Kumar, let's address that second issue first, because that's a very important one. You know, where is the profitability coming in from, and what do you believe on the back of everything that we've heard on this panel? There is complete consensus that digitization has brought down operating costs, and it will do more to bring down operating costs. You know, the complexion of the of growth and profitability for the banking sector, and how much of that can be passed on to the end customer?
So first thing, all of us need to realize we belong to the most populous country in the world. Okay. It's a very large market. Today when banking sector is talking about the prospects of the future, and when the entire world is looking towards India, because this is a very large market. Okay. And today I think we are discussing in this room with a lot of pride about the future. Because one of the factors is that we belong to a very strong country, and we belong to a country where things are stable. And that's why everybody is looking. And I think one of the important piece to take it forward would be inclusivity. So how we can see whether this is about rural India or whether this is about the urban India. How we can cover our population within the banking channels. I think in the past few years, we have been able to do successfully in terms of opening the liability accounts, making the transactions available very conveniently. But I think the next phase is how we can cover from the credit perspective. So I think very large population today is not covered, and I think there all of us are seeing the opportunity. But the important part would be first we need to build the capabilities within the institution to handle that kind of credit and then go for it. When we are talking about going forward, there may be some risk, there may be some roadblocks. I think those issues would be there where we go for those kind of credit opportunities without building adequate safeguards. So I think anybody who works towards this, build the digital solutions, lower down the operating cost, then there is a huge opportunity.
Okay, huge opportunity, and we'll get to the safeguards in a minute. But Zarin, I want to address the issue of climate finance that we just heard there from Mr. Tiwari, and the expectation or the belief that it could in fact result in doubling of the book. I know that this is an opportunity that you believe is something that the sector must focus on as well. Where are we? I mean, are we close to an inflection point? What do you believe are the challenges, the roadblocks in being able to ensure that we do in fact see this opportunity open up?
Yeah, so Shireen, I think as a country we are still very tiny. When we look at global, last 2-3 years, about $32 trillion has been spent on climate change globally in 2 years, last 2-3 years. India is very, very tiny, it's 1% of that. Having said that, I think the last 2-3 years, the kind of acceleration that one is seeing in the kind of investment is quite significant. And the heartening thing is that it's not the big companies who are talking, it's even the small vendor who's conscious that, if they're exporting, their ecosystem will be expected to be climate compliant. And they are also thinking of how to have renewable sources of energy or even recycling of water or many other things. So I think it's a very good development happening. Having said that, of course, there are countries who are giving a lot of sort of economic benefits. So if you look at Japan, for example, the first 1 year interest is interest-free if you're investing in a renewable project. China is also giving quite a bit of, about 60% of the amount that is lent is given concessional interest rate. US has announced $300 billion plus in various incentives, guarantees, grants, etc. So we see globally a lot of momentum coming. Coming to India, I think today sustainable finance is not, there's no particular benefit in interest rates or anything. So if you look at our other countries in our network, actually sustainable deposits, when they are accepted by a bank, they actually give 25 basis points lower and pass on that benefit when they lend. But that we have not reached that level of evolution. The other thing, if we look at globally, for example, PRA, our global regulator, they give you a benefit of risk-weighted assets of 25% benefit. Of course, there's a guideline, but if you comply with that, there's an incentive to the bank in terms of risk-weighted asset, which means you're consuming less capital when you're doing renewables. So I think some of these things will evolve as we go along. But having said that, I think SEBI's come out with guidance on, to ensure that you don't have greenwashing, etc., etc.
Yeah.
The disclosure standards have come. So I think we are in a journey. It will accelerate, and we are already seeing a lot of, dollar money really focused on pure sustainability-related investments. So if clients have the access to the pools of money is huge. Global pools of capital, equity and debt. So definitely one will see quite a bit of momentum coming into play in India also.
Speaking of momentum, Kaushik, and I want you to add to this, and as Mr. Tiwari pointed out and Zarin said as well, and more companies today in India, I was talking to Sajjan Jindal at JSW yesterday, they're looking at getting into battery manufacturing, electric mobility and so on and so forth, and of course for their legacy businesses are talking about needing another $25 billion as they double steel capacity, so that's another side of the story as well. But what excites you about what we've just spoken of in terms of this new opportunity that's opening up?
I think when we look at it in terms of the broader needs, I think the banking industry has lots to do. As was mentioned, we have the growth in this country is going to go quite high. Currently around 3.3 to 3.5 billion of GDP, expected to go around 6 is what we expect by 2030, almost doubling ourselves. With manufacturing as of now 15% of the GDP, says somewhere around half a trillion. If you are having an ambition for manufacturing to be around 25% by 2030, then you need 1.5 trillion will come from there. To put that in, you will need capex, minimum double of that. Different industries have different needs. Let's take it somewhere around there. So the amount which is required is not something which we can, only the banking sector in India can fully fulfill. We have domestic savings, but they will not be enough. So I think there is a need for finding other pools. We need FDI, we need FPI, we need FII, and we need to access those pools in a manner of where investors are interested. And sustainability is going to be very important. So I think there is a huge pool which we need to bring in. And India is a destination where everyone is also looking at. So I think there's a combination of what our industry needs to do onshore, as well as to how to tap capital flows which we need to get to meet our ambitions. Because we will not be able to go where we want, even though we may have demand and everything coming in, you still need financing. And bulk of it will come from onshore, but there'll be still a fair bit we'll need from offshore.
Yes, a significant portion will come in offshore. Yes, Mr. Tiwari, please go ahead.
I just want to make a point here. Actually, rightly so, our domestic savings, etc. may not be enough. However, what we need to package the way we need, because in our case, 40% of the emissions are from power sector. And in power sector, a large part of the production is thermal still, despite all the advancements on renewables. So we need to package it in such a manner that while we will continue to have thermal for some time as a base power, how do we reduce the emissions from the thermal power itself? This is not something we have worked on. So for example, by installing FGD, the flue gas for sulfur desulfurization, for example, by installing coal washeries, there are many low-cost interventions which can be made in renewable power, the thermal power. And if we measure the emissions starting and the subsequent emissions which are shown to be reduced in a manner which is accepted by the international financing community, I think we should be able to attract some investment in those areas also, which are as of now strict no-no. Nobody is even talking on if as soon as we mention coal, people say no. So if we need to package this and then leverage with all the other players who are there, including multilaterals, there is no shortage of capital, like Zarin said. We are able to get a lot of capital, but all of them want to go into pure renewables or pure so-called green. Nobody wants to talk about a transition from where we are and continuing to use thermal, etc.
And that is the challenge, because we are in the midst of a transition at this point in time. Absolutely. And yes, energy security for us, at least at this point in time, is dependent on coal. But let's address the issue of wealth creation in the context of the assumptions that we're making. And Rajiv, I'll start with you and I'll get everybody else on this side of the panel to comment on that. The expectation or the assumption is that by 2030, we should see per capita go from the current 2,500 to 5,000. That's the hope at this point in time. What will that potentially mean? What will it mean in terms of the kinds of products and services that will need to be put on the table as well by the sector?
No, it's a huge opportunity. I don't think there's going to be any other economy which is going to see such rate of growth in per capita income. I feel on the individual side, it will obviously lead to humongous growth, but it should lead to huge number of new products coming into the market. While there will be traditional products, but I think wealth management will go through a sea change. The way it is being done today versus it will get done tomorrow. And all the people in the industry have to think of how it can be looked at from a customer's point of view and not from a fee point of view. I think that's a big change which the whole economy has to go through. We will see even new asset classes, in a way, or redistribution of monies across asset classes, whether it is real estate, whether it is gold, whether it's markets, debt. I think each one of them will see a new set of products emerging, things which will lead to long-term wealth creation. But all of this will happen. We could see even miniaturization of wealth management, because while we will see wealth increasing on the urban side, so will we see it on the rural side. And again, distribution costs will become important. So we may see a lot more of miniaturization also.
Okay. Mr. Kumar, how do you see this potential opportunity?
No, I think that what I was sharing in terms of inclusive growth, I think that would be very critical. But I think the best thing in terms of what Govind was sharing in terms of digital adoption by the very large population. Today, if we see, like we were just getting some data, on the mutual fund side, most of the SIPs are coming from the rural area. Even there is a equity participation from those people like who are not able to save in a fixed deposit kind of. So there are queries in terms of whether even I can say invest in a fraction of a share. So I think this fractionalization and offering some of the products in the sachet to our large population would be definitely where there would be more inclusive wealth creation.
Right.
So I think this is again an opportunity. I tell you, like somebody asking, is it possible for me to invest in a Google share? And the person who is not even putting money in a bank's fixed deposit. Just see the level of awareness. They're understanding that
they're watching CNBC. I'm sure they're watching CNBC.
No, I think we give the full credit to CNBC for that.
No, but we've gone from miniaturization to fractionalization. Zarin, I want to get you to comment on this as well, because again, this is something that you believe is likely to see exponential growth. Cutting chai.
Yeah, I think if you look at financial savings, it's now 12% of the GDP, and physical savings is 10%. I think that mix will change. We'll see, because less and less towards gold and real estate, and maybe more as the per capita income grows. And India has, I was reading some report, India has $8 lakh millionaires. That is expected to double in 5 years to 1.7 million millionaires, dollar millionaires. So, and what we see in India is that professional management of wealth is about 12 to 14% of the people go for it. If you look at China, it's 60% plus. So the more the economy grows, actually you'll see a lot of professional wealth management coming into play. And in our own bank, we've seen our business grow double-digit annually for the last few years. I'm sure it will continue to be that way. So more and more what we'll see is more people actually using professional management as wealth increases, because what happens is the diversity of products that comes into play as wealth increases. For example, last few years, the number of AIFs which have come, right? That needs a little bit of sophisticated wealth manager to help an individual. It's not like a SIP that you invest. And also what is happening is a do-it-yourself. The youth love that, online kind of wealth platforms, and they don't mind a do-it-yourself. So different forms of wealth management will come into play. And to me, the opportunity for next 2 decades in wealth management seems I'm very optimistic on
Kaushik, how are you gearing up for this multi-decadal opportunity?
Yeah, I think opportunities are going to be lots, are going to be a lot of them. But I think the key is each one will have to look at what's your USP which you offer. And I think we will all have to find our USPs of what we add value to the customer. To the very point Rajiv said, let's not look at making margins, but let's see what value we add. And I think different players will have their strengths, and I think the point is that the market is so huge, each one with their USP will find enough to grow. So I completely do agree that this part of the industry will grow faster than the lending industry.
And Shireen, if I can add one more change which we will need to watch out for is, will you make money through distribution income or advisory fee?
Or advisory fee. Govind, I want to address the same issue with you as well as Mr. Venkatramu. What do you foresee as the opportunity and the kinds of products and services that you believe Bharat will require, and who services those?
Yeah. So
You'll have to just hold up the mic.
Question.
Yeah. Just closer to your...
So while talking to your question, I also respond to what Rajiv mentioned about the distribution cost. So there are 2 or 3 aspects to it. So what is typically happening when you move to rural India, in the where the population is sparse and it's not dense. So people generally go to large cities. Now the cost of distribution for large cities could be lower. And when we talk about ROA, in fact, it will be very high for those in microfinance and unsecured lending business. But if you talk to anyone, people go to Patna and Varanasi of the world, but no one goes to interior Mau, in fact. Now the cost of delivery or cost of distribution in Mau is almost 5 to 6 times higher could be for Varanasi, in fact. So that is very important part. What Prashant sir also mentioned about this part. Now if I am able to get complete digital, my cost of distribution for interior Mau will come down, in fact. That is where it will make a big difference. So I'm talking hardcore micro. So that is one important part. Second, I'm seeing, and that not only for future, but in past also, we are seeing a lot of self-entrepreneurs coming into play, in fact. And now there's a trend also, not in metros, but you talk to interior of the country also, there are people who are becoming self-entrepreneur. I talk to people who are in 10th or in graduation, and I'm talking again interior, hinterland, in the semi-urban area. They Hindi bolte hain, khud karna chahta hu. I want to do something at my own, and they want to experiment and take a risk. And I'm again not talking, it's not a Mumbai or Delhi phenomena. I'm talking of interior kind of phenomena. I think that will bring, you can say experimentation, growth, and risk taking ability of people. Third, the product and services. What we saw, if you look at 20 years back, if I have to move, say, from metro to a smaller town, say, for example, if you have to Patna from Delhi, you'll think that nothing will be available in Patna, but is available in Delhi. That's not the case today. And now the trend is changing because, so in case of financial services also, so for example, things like loan against property is a very simple product, but it was an urban phenomena. If you really ask till 5 years, 10 years back, no one was talking of in rural and semi-urban that will do loan against property. Now there is a big market. There are a lot of players who are already working on that, and we expect that this will go up. So rural housing is another example. People who are going after 50 lakh, 60 lakh, 70 lakh rupees type of housing loan, but no one was looking at 3 lakh, 4 lakh, 5 lakh type of rural housing. So a lot of such, beside the consumer durable for sure, so many such products which were for urban area or for the metros with a smaller ticket size, if the cost of distribution is lower, if digitization is there, those are also going, or those will go further in the rural and hinterland. That will make a big difference. That is my sense in the next 2 decades.
Yeah, and I would imagine that you agree with that as well. This attitude of wanting to turn entrepreneur, the risk-taking ability that we just heard Govind talk about, is the system geared up to be able to cater to that aspiration? And in many ways, digitization has actually ensured that, as he pointed out, whether you're in Delhi or Patna, the aspiration level is starting to level out, but the ecosystem isn't.
There again, online platforms which are available are probably bridging that gap. Definitely the aspirational value is catching up, but the kind of availability that you have, especially on the online platform, that is catching up. The other important factor that we need to see is that ability, the risk-taking ability, is probably more across the kind of people who are of younger generation as compared to the older generation. But I would like to add, one more facet to this particular part of savings, is that there is still large section of population which believe in traditional savings, particularly the postal savings. If you look at the small savings, recent launch of Mahila Samman Nidhi, that has seen a good uptake with almost 500,000 customers in less than 2 months. So that is one aspect. The other aspect, especially at the low end of the segment or the bottom of the pyramid, they have an ability to save towards certain goals, like goal-based savings. So if you know that you want to purchase some consumer durable over a period of 6 months or 1 year, then there is an incentive towards savings that. So those small, short term of savings is something which is also catching up because of the aspirational value.
Yes, we are certainly seeing the aspirational quotient play a catch-up there, but of course there are disparities, significant disparities that continue to exist in servicing those aspirations. Let's talk about regulation. And Mr. Tiwari, I want to start by asking you, and you of course did allude to the expected credit loss requirement as and when it does come in. And I know Mr. Khara also believes that currently it is it's a figment of imagination at this point in time. But just from a regulatory perspective, where we are today, and more importantly, as we grow and we look at the opportunities that we just discussed, what needs to change?
So, a couple of things. One, of course, the expected credit thing. RBI is on record of bringing out a discussion paper, and they do believe that we do need to align with the world. Everybody else, Europe, US is on that model, IFRS. So we also need to go there. Of course, we have to say how do we stage it out so that it doesn't crimp growth. Because right now the balance sheets are cleaned up, the growth is happening, the credit is growing double of the deposit growth. So we don't need to stop that part. So with that caveat, and of course with a proper think through, we should go that way, hopefully in some near future. Having said that, there are multiple things. One of the things which was brought up in the climate finance itself, we are in conversation with RBI to bring those kind of enablements like risk weights, like including that in the as part of the priority sector. Right now the priority sector definition of climate finance is very narrow, compressed biogas up to and a solar of very small capacity, solar pumps, etc. So that can expand. It can be considered as part of infrastructure also and get those benefits for large ticket projects which are there. So those regulatory enablements definitely are going to help. In addition to this, of course, the regulator keeps refining the policies, like today's announcement on first loss for the digital lending.
Right.
This was an area of clarification which was pending for some time, and now that it has come, hopefully the fintechs or the startups with the partnership with NBFCs and banks will again start on this route, and that will also help bridge the last mile lending problem for very short ticket loans. So these kind of things which are going on, I think these are a continuous dialogue. They continue to engage with us, we engage with them, and whatever we need we keep telling them. And generally it's been evolving in a manner which is representative of central bank, which is conservative, cautious, and taking it forward. So as long as that happens, we are okay with that.
Okay, conservative, cautious and forward looking and predictable, I would imagine. That's the ask as far as regulation is concerned. But speaking of regulation, let's talk about the NBFC space, because as Mr. Tiwari pointed out, there's been regulatory changes there as well, scale-based regulations coming in for the NBFC sector, which has prompted a reorganization even as far as Tata Capital is concerned, with the merger of two of your subsidiaries and possibly an eventual listing. What does this do as far as the NBFC space is concerned? Does it take away the arbitrage that the NBFC sector enjoyed so far?
First of all, I don't know where is this arbitrage.
Figment of everybody's imagination, is it?
Figment. I think both the sides feel that the other entity has the arbitrage. And I'm sure if we switch sides, we will still feel the same way. So that's human tendency. But I think what the regulator has done, and very sensibly, tried to classify companies into different categories and made it more onerous for the bigger ones, which is good. I think what is very important is for the whole ecosystem to believe and feel that the system is stable, the companies are strong, and they have adequate controls in place. The governance levels are strong, and they can last for centuries. So that's the whole thought process. And to that extent, we found these regulations pretty useful. Most of them we were anyway complying with. So it was not difficult to move in that direction, and which would be true for any good company. It also has increased disclosure levels, and with listing happening, those will also become even more. So I think it's a positive thing. I think what is very important going forward is to look at how the banks and the non-banks can move together to fulfill the larger ambition of India of ensuring that the credit is available to the last individual in the economy.
So on track for the listing within the time period, the 3-year time window?
Absolutely.
Absolutely. Well, you pointed out how NBFCs and banks need to work together, but let's also address the issue of fintechs and the banking sector. We were talking about digitization, but this is a different aspect as well. And we've gone through that phase of, are these two sectors going to be at war with each other, to now seeing how these two sectors can actually collaborate much closer with each other. And I want to start by asking you, Mr. Tiwari, of what you see as the future as far as fintechs and banks are concerned.
So you're right, maybe around 3 years back, this was the conversation that will they take away all our business and all. And in these 3 years, we have found that we are collaborating with quite a few fintechs in various aspects. So for example, pulling of data of GST, the PAN data, etc., which they are able to do in a very seamless manner, players like Karza and all, I mean, they've already become embedded in our system. So therefore, we no longer talk about them as fintechs or something. They're like partners to us, and which was, I think, which should have been the original idea. And collaboration I see happening on a very large scale. And clearly, they are much more nimble. Their UI UX is much superior. They're able to respond to requirements of the customer in a much faster manner. So I now see us developing an API library where we are able to share our core APIs with fintechs wherever as soon as we onboard them. Onboarding process, of course, has to be a little bit detailed and a much more, so that we take care of the cyber risk, we take care of the scalability, we take care of the fact that the fintechs may have smaller teams, and we do not want a situation where suddenly some fintech drops out and we don't know who will service that app or the application which was provided. So subject to these kind of things, I am seeing a lot of collaboration happening. And I'm very, very hopeful that this partnership is going to really add real value to the customer, which is what all of us want.
Mr. Kumar, I want to understand from you how you see this partnership between banks and fintech, especially now in your new avatar.
No, I think Yes Bank has been always very supportive of the partnership between the banks and the fintechs. And we have seen a huge advantage also. Okay. I think only because of this collaboration, today we are almost contributing 40% to the UPI transaction. And UPI transaction touching almost 10 billion a month. And we are talking about 1 billion every day in say next 3 years. So I think this kind of say partnership has actually helped both of them. Okay. And I think everybody has seen that it's not about each other. It's about how we can add value to the customer. And I think they have some huge strength which are not there in the banks. Because banks are heavily regulated entities, they have to focus on, say, different kind of things. Whereas their focus is on one problem statement. They pick up one problem statement, provide the solution. They are very innovative. And I think they are able to read the pulse of the customer much better than a bank. Right. So I think those kind of innovations, when they are adopted in the bank, in that partnership, brings that value to the customer.
You know, speaking about adding value, and Sanjeev, you know, again, I want to come back to you now on the back of what you've heard so far, and specific areas of opportunities, specific areas of strength that the banking and the financial services sector intend to leverage on. You know, what to your mind, from the global experience, from lessons learned from other jurisdictions, do you believe needs to be the way forward here as well?
I think first and foremost, just to the previous point I want to make, I think look at SBI YONO, for instance. I think just the infusion of fintechs and so on and so forth have made banks look so youthful. I mean, today you can almost purchase things, right? I mean, it's almost an outlet to purchase things. So it's already, and some of the shifts that have happened regulatory and otherwise, I think they've been tremendous. And I think we should celebrate it, including things like, you know, more recently CBDC. I think we didn't speak about that. I think these are huge enablers for us. I think we should actually, you know, when we go forward, particularly when we talk about trade, I think two things which, you know, in some ways stand out for me based on the conversation really. I think first is going to be the focus on green financing. I think that really is a huge opportunity. And I think, as Zarin said, I think we are just at the, you know, just at the tip of the iceberg. I think there's huge possibility out there for us, for the Indian banking system. And the second one, which again I think while we are talking about a lot of consumer-based growth, is really the firing of the capital cycle. And I think while today we are talking about how we are serving the customer, the individual, I think we need the capital cycle revival, and that I think is a big opportunity which lies ahead. With all the digitization, with everything else, I think that those are great things. But I think these two, to my mind, are the things that I would look forward to in the near future.
You know, you talk, yes, Mr. Venkatramu, go ahead.
Yeah, I'd like to just add one point about the collaboration of fintech and banks. See, one thing that we all need to understand, that the traditional technology that got applied to banking has no skin in the game as far as technology players are concerned. You know, what really benefited with the advent of fintechs coming in is that value creation and bringing about the consumer experience, and they having a skin in the game. So the way, you know, commercially it benefited both the parties has actually disrupted the market.
and for the benefit of the consumer,
Yes.
and potentially to grow the pie as well. You know, you talked about CBDC, and let me start by getting wrap-up comments from each one of you. Yes, sir, go ahead.
One another nuance on the CBDC. I think this is not really well recognized. I think in the interest of national security, CBDC on a different rail, I think it's much needed for us to be sure that the UPI should stay safe. Something happens to the UPI, we have the CBDC. So I think we should look at it that way and also encourage it so that it also comes up as a viable payment mechanism which is kind of a default or a BCP, if I can use that word, vis-a-vis the UPI rails. So that's something I think we have not considered so far.
Okay, so CBDC as a safeguard to UPI is something that you believe should be encouraged. But let me ask you, Mr. Tiwari, and then I'll get Zarin to comment. CBDC 1, account aggregator, potential other disruptor. What would you list down as the top 3 disruptions that we're likely to see?
So account aggregator clearly is one major disruptor. I mean, in my personal view, while that is the official policy, I think we have gone ahead with the open banking, much ahead of any other developed economy. UK is the only other name which comes to mind, and we have seen what has happened in the UK. So it's kind of an unequal battle where, as a large bank, we are providing all our data, and we are not able to use all the other data which is available because the kind of products which are needed will take time to deliver. So having said that, this is one thing. Second, of course, is OCEN, the Open Credit Network, which is still coming up. And as bank, we need to partner with that and see how we can deliver end-to-end digital solutions so that the pickup is very, very quick. And we have done something in-house for our own customers, the digital lending on back of YONO, 4 clicks personal loans, which we have already delivered, called pre-approved personal loan. And going further, the ONDC again is a big opportunity because the banks have still not integrated into that system. I mean, we should be there on tap to fund whatever opportunity arises in the ONDC. So to my mind, these are the 3 big opportunities in terms of disruption, but both disruption opportunity always go together.
Okay, account aggregator, OCEN, ONDC, the next big disruptors for the sector. Zarin, add to that list.
Actually, these were my points.
Those were yours as well.
But anyway, I just thought on the CBDC, I thought, like he said, that's a very valid point. But CBDC may have its own niche. So, you can have a very specific kind of way you can use CBDC. For example, suppose you want to do DBT and you want a finite end use of that DBT, or you want to give a food coupon and have an expiry date. CBDC will enable you to do very, very specific kind of use cases.
Even more effective targeting.
Yes. So UPI, while it's a great payment mechanism, CBDC can have very targeted end use, end date, end expiry. You can use it in very different ways.
Okay, that's
and
interesting.
to my mind, that will evolve the way UPIs evolve. And of course, CBDC, I think the adoption will be a struggle because people are so used to UPI.
Yeah.
But moment you use CBDC for financial inclusion, it can really take
the demand generation will have to happen by the government, at the end of the government,
I mean, to
essentially.
get the scale, I mean, if you do DBT or food coupon, like, for example, a lot of, in COVID, all that kind of stuff that happened, CBDC is a great tool to use it for a very targeted use, end date, end expiry, whatever. You can make it very customizable.
Okay.
So that's the play that I see.
Nice.
It will come, other thing. And of course, a lot has been talked of metaverse, but we have to see how it evolves. But our own bank in Hong Kong has bought land in the meta world and our Hong Kong office is working on co-creation.
How many have you bought assets and land in the metaverse, Mr. Tiwari? Is SBI going shopping in the metaverse yet? not at the moment. Kaushik.
I think these things we talked about, account aggregator, OCEN, etc., are going to be disruptors. But I think what is going to be even more important is that it cannot be that only the financial sector part does its job, but we need financial sector to support our clients to do their workflows better, to get them connected to their ecosystem better. And I think time will come when we will be tasked not only to provide the financial part of it, but help them through our connection with fintechs, etc., to offer a full workflow solutions. And I think workflow solution is going to be the next real mantra which is going to come out in a big way.
Okay.
So we cannot only stop by having a very smooth payment. If you go and talk to a customer, payment is or receipt is at the last end of his value chain. But what about the various things he has to do before that and after that? So I think we need to, in our industry, really find solutions for our customers on that. And I think some of us who will do that more will probably see, clients really very keen to solve that.
Okay, Govind?
Yeah. So I may be talking a little different, which is not financial services. So, from hardcore experience, what's more important to me and what will make big difference is the quality of health and education in the rural India and the semi-urban India. Because we have seen a lot of mushrooming of, all these things, but the quality has not improved to that extent it should have. We are seeing a lot of digital infrastructure and physical infrastructure that has actually significantly changed in the rural India also. But these two things, coupled with the skill development part, the skilled education part, I think these three will be a big game changer for the semi-urban and rural India. That's my take going forward.
Absolutely, and that was something that Gayatri had alluded to as well when she spoke of talent in her opening comments. Gayatri, you started. Now I'm going to ask you to wrap this up on the back of what you've heard.
Oh my God, okay. That's going to be a tough one for sure. I think from a disruption perspective, I will add two, right? I definitely feel open banking and GenAI will be top of the two disruptors as well for just not financial services, but I will also say that somewhere the blur, right, which is there between manufacturing, financial services, banking and the retail, right, FMCG, etc. You really need to get that all going. Definitely open banking and GenAI will play a huge role, huge role, right? And wrapping up, I think first and foremost, absolutely wonderful conversation, right? Thank you for Shereen. As usual, you made it, I think, wonderful, really wonderful. And thanks, panelists, for really making it very interesting. And I think we spoke about almost everything that happened today on MPC too, right? What the growth has to be in the country, from whether it is an NBFC, a private sector bank, a large public sector bank, or an MNC or SFB, and of course a payment bank, right? And becoming, right, in terms of looking at the life journey of these banks also, right, in terms of him going to public. Definitely we won't ask him any futuristic questions, and he is confident that he will go in 3 years,
in 3 years,
and then he will become a universal bank very soon, and working with the regulators. So I think highly interesting conversation. I think the opportunities are humongous. And I think the uptake on, right, in terms of the credit and what needs to be done for that. And I love and I mentioned it in my earlier thing on sustainable finance. Yeah. I think toward what Mr. Tiwari ji said, almost doubling the book, right? It's like, wow, what are the opportunities that are there in front of us, right? I think a lot of food for thought and a lot of food for consulting people like us, right? We will have to think.
Nicely done, nicely done. Well done, Gayatri. Nice.
Absolutely, right? That's my job. Yeah,
very subtle, very subtle.
I'm absolutely very clear about it, right? I have to do my job.
No, absolutely.
So we'll think through, and we will have to absolutely engage and dialogue, right? Thank you very much.
Well, thank you so much, Gayatri. And ladies and gentlemen, thank you so very much for joining us here with some wonderful insights on what the road ahead looks like for India's banking sector. But more importantly, what needs to be done to ensure that we can truly deliver to the potential that we've all spoken of. It is not a homogeneous market. It will require greater degrees of customization, greater degrees of personalization, greater degrees of digitization. But those are all challenges that you, ladies and gentlemen, will need to put your money and your might at work. But thank you very, very much for joining us here for the second edition of the CNBC TV18 PwC CEO Dialogue. From all of us here on the team, for now, goodbye. Thanks for watching, and we'll see you again shortly with another sectoral deep dive. For now, thanks very much.